I'm Melissa Shaw with the Investing News Network at the Sprott Vancouver Natural Resource Symposium 2017, and I'm here with Randy Smallwood, President and CEO of Wheaton Precious Metals. Can you provide a brief introduction to the company and the concept of precious metal streaming for those who might not know about it?
So Wheaton Precious Metals started off as Silver Wheaton back in 2004, and we came up with a new business model called streaming. And at that time it was silver streaming, but it's now been broadly applied to other precious metals and now even base metals, and I think even recently a few other substances. Anyways, we started off the business model back in 2004 focused on streaming silver from base metal mines and from gold mines. The streaming agreement, the simplicity is actually confusing. It's very simple. We make an upfront payment to the operator, and for that upfront payment, we get the rights to a certain amount of precious metals production, typically a percentage, up to 100% of whatever precious metals that they produce. When those precious metals are delivered to us, we make a production payment on a per ounce basis, and that's typically a fixed amount. So the huge benefit to us and our shareholders is that our costs are specified at the very start. The capital costs are fixed in that upfront payment, and the production costs are fixed in that production payment that we make as each ounce is delivered to us. These are typically life of mine agreements that go for a very long time. If we invest into assets that have good exploration success, then we have good success, and our shareholders share that. It's a very strong business model that gives excellent exposure to precious metals with very little cost risk and very high margins.
And you mentioned the change of name. I was wondering if you could talk a little bit more about that. So it used to be Silver Wheaton, now Wheaton Precious Metals. Just wondering a little bit more about why that change was made.
Yeah, we started off focused in the silver space because we created this company from a company called Gold Corp. And of course, Gold Corp was focused on gold, and we spun the silver out of that company, and hence the name Silver Wheaton. Over the last 5 years, we've actually added quite a bit of gold production, gold byproduct production, mostly from copper mines, but even a bit from nickel mines. And so with that gold production, our revenue split right now is about 50-50 between gold and silver. And so hence the name change. People still were thinking of us as purely a silver company, and we felt that the name didn't reflect the diversity of our portfolio. So we had to change the cover of our book to match what we have inside our book.
Mm-hmm. Was that surprising to a lot of people?
No, people have seen us make gold investments over the last 3-4 years, and so we actually had quite a few shareholders asking us when we were going to change the name. I don't think it was much of a surprise. It does reflect the fact we are pure precious metals, and it still holds the history of, the very strong history of the Wheaton name when it goes all the way back to Wheaton River, which originally has now morphed into Gold Corp. There's been a lot of value created out of the Wheaton name, and so no, I don't think it surprised too many people.
And so you mentioned having a lot of diversified interests now. Can you talk a little bit more about some of the mining projects that you're excited about?
Probably the lead project, and by far our largest contributor, is the Smallwood project with Vale. It's a copper project down in Brazil that has continued. It's in very early stages. Its second phase of expansion has just finished off, and Vale is already studying a third phase of expansion. It'll deliver well over 200,000 ounces of gold production to us per year for many, many years. It's got close to 50 years of reserves right now, and the ore body hasn't even been drilled off. And so what's pretty exciting is that Vale has finally brought the drills back onto the property. It's been about 15 years since they've done any exploration drilling to try and expand the ore body. This year they've brought the drills back on, and as I said, they're looking to do a third phase of expansion that looks like it would be, at a minimum, their base case is about a 50% increase in production levels. So it's a very, very exciting project, very, very early stage, very immature, and we think we're going to see a lot of really promising things from that ore body and from that mine for many, many years, well beyond my time with this company. We've got a few other projects, Peñasquito down in Mexico, where Gold Corp's investing into a pyrite leach project to improve overall recoveries. Antamina in Peru, which is continuing to do very well. It's shifting into a zinc mine from a copper mine at a very good time for zinc prices right now. And a huge portfolio of other assets that show all sorts of promise.
And I wanted to take it back to silver. Silver's been volatile this year. Most analysts believe it's positioned to gain, and I just wanted to get your observations on the market.
Well, silver has hit peak production. We've seen a drop in production. At these prices, people aren't investing into it. One of the things that we like about silver is that most silver is actually produced as a byproduct. It comes from lead zinc mines, and a little bit from copper mines and a little bit from gold mines. But 70 to 75% of silver does not come from silver mines, which means that it's got a very high beta, very high volatility. When precious metal prices move, silver always outperforms. Now, this is, of course, a very good thing on the way up, as it outperforms up, but it also outperforms on the way down too. It is a very volatile commodity. But what we've got is some really sound fundamentals behind silver that show great promise. We see a peak in production. There's been declining worldwide silver production every year for the last probably 3 years now, and there's no end in that. People have not been investing back into the silver space, and even the base metals haven't been growing enough to sort of make up, especially the lead zinc space hasn't been growing enough to make up the shortfall of mines that are exhausted and running out of ore reserves. The other side of silver that's attractive is the industrial demand. Silver has one attribute that makes it very unique. It conducts electricity better than any other noble metal in the world. And so that means it's going to be used in high efficiency applications, mobile electronics, solar power panels. Silver always will have a role there because it has less energy loss. It has lower resistivity, higher conductivity than any other noble metal. And we even see it being applied in health applications. It's got very strong antibacterial applications and really good in purification systems and burn bandages and such like this. And so we see increasing demand to the point of where for the last few years more than 50% of worldwide silver production has been consumed, truly consumed by industrial applications, and that continues to grow every year. And so we've got growing industrial demand against declining worldwide production. It leaves less and less for the investors out there.
And coming back to the investors, can you talk a little bit about what we're seeing with silver ETFs right now?
Well, silver ETFs typically have been very resilient. Silver is a metal that does hold a lot of retail interest, especially in the United States. And so if you look at the volatility, it's interesting, the contradiction, because the gold ETFs have shown a lot more volatility, whereas silver seems to be very resilient. And I think the challenge is that people do find it hard to find places to invest into the silver space.
What advice would you have for people who are looking for ways to invest in the silver space?
Well, Wheaton Precious Metals is 50% silver, 50% gold. I think the streaming model, when you compare it to ETFs or even bullion holdings, you can buy silver bullion or gold bullion. What we deliver in terms of the cost confidence on the capital and the operating side, plus we pay a yield, plus we have growth, both organic growth, incredible growth potential at our assets, and the opportunity to do accretive acquisitions going forward. When we compare that to what an actual ETF or bullion holding does for an investor, we do think that Wheaton Precious Metals represents the best way to invest into any precious metal. That includes, of course, both silver and gold.
And I'm coming down to my last question. I was just wondering if there's anything else that we didn't talk about, anything else that you wanted to add.
Well, I do think that precious metals are becoming a more and more important source of stability, it's a stable haven to keep capital, and you get exposure relative to the commodities and currencies of the world. Whenever we look around the world, the volatility that we see around this world right now, the tendency of governments to always overspend and to make that up by devaluing their currencies. And I can tell you that when it comes to keeping capital, to preserving capital wealth, precious metals is the solution. It's survived many, many, many centuries of governments and controls, and it still stands firm as the best way to store capital wealth. And in times of volatility, on a relative basis, it's a great place to be invested.
Great. Thank you so much.
Thank you.
So that was Randy Smallwood, President and CEO of Wheaton Precious Metals, and I'm Melissa Shaw, reporting for the Investing News Network.